Good morning everybody, and this is your S&P 500 setups for today. So obviously the US was the only country really up and about yesterday. Everybody else was still on long weekend, and I hope you had a great long weekend. We had a big, massive engulfing bar, but that's because of the gap up. So if you actually look where the market closed in this area at 52.51 before we went on the long weekend. So that's basically the actual cash trading. So this gap up here was just a recovery from the gap, and then we basically just went sideways. So we are back in this range. There's a couple of different scenarios. We do have a crossover the oscillators and now pointing down, which could indicate more of a move to the downside. But if you just start getting back into the lower time frames, you're going to see a massive spike into a channel, and if you look left, you've got a significant amount of support right here at 52.38. So 52.50 is obviously still that level that we need to pay attention to. Watch out for this diversions here. That's bullish diversions. You can see move up, pull back. So for me, I'd be waiting for a move back to the upside. If we start dropping below 52.20, I'd want to see us drop well below 52.20, come back and test it and sort of reject it before even looking at shorts. So oscillators at the moment, at the bottom we have separated a little bit, and the faster moving oscillators starting to come together here. So when we get down to the hour, we can see we are extremely oversold at the moment. And look left again, and you're going to see a significant amount of resistance and support. You can see we are just basically flirting with 52.44. So what are we looking for today? I think I'd rather wait for a break and retest to the upside than trying to jump in anywhere else at the moment. You see we do have a crossover the moving averages. We're in amongst the moving averages. We do have German CPI data this afternoon, so that may just force Europe to go sideways, which means we'll probably go sideways as well. So this is the range we're in at the moment. So 52.50 is to the upside, and 52.38 to the downside. But I don't think I'd be wanting to take shorts. Just look at how much potential support is here to the downside. Just pick up this tail here, and if you just keep looking left, look at all these tails which are going to offer support. So yeah, so I think it's probably wise just to wait and see what transpires today. I'm not sure what happened. I know that NASDAQ was driving this to the downside, but I'm not 100% sure what was going on. And it's probably just low volumes and algorithms that were trading. We have left a gap to the upside as well, and this is when we had some data come out yesterday. It wasn't that bad of a data. It was slightly off what everybody was expecting, but it wasn't that bad. So I think I'd probably look at this as a knee-jerk reaction, this fall, because it was looking to build a base here, and then we sort of gapped down and then ran for a bit before going sideways. So yeah, so sit on hands, I think, is the call for me at the moment. Let's get it back above 52.50 before looking for a move to the upside, and I expect this range to continue through to this afternoon. I don't think you're going to get anything else at the moment. Moves to the downside is going to be short-lived. I don't think you're going to get much because of the structure that you've got to the left. So that's probably the only way that I'm going to trade this. If we do start dropping below these levels, I'm not going to be trying to chase shorts, just because any one of these tails here could hold us up at the moment. So I'll be very cautious with that. Okay, so anyway, that's kind of my view for today. 52.50 is the one to watch. Get it back above it, and then you'll be targeting this gap at 52.67. That's kind of how I'm seeing things at the moment. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.